So it's somewhat more nuanced than that. So what the ECB is likely to do, what they seems to be saying with the press release and what they've been hinted at in the past, is to include owner-occupied costs. So it's not the whole house prices, it's not house price inflation, it's not asset inflation. So that's quite different. But maybe to your point, that at face value could create perhaps a more volatile inflation metrics. The ECB will look at a range of inflation measures, however, and the owner-occupied cost bit is likely to add, in my view, from anything as low as just 5 basis points to perhaps up to 0.25%. But this is different from including house prices, and normally consumer price indices don't do that. That would be a measure of asset price inflation.
But there is a link between what we have seen in some of these markets with the escalation of house prices, but also rents paid. And that link doesn't seem to be broken until there's a lot more capacity brought into the system, which we're simply not seeing at this point. So it feels as though the conversation is a relevant one, isn't it?
Yes, it is relevant from this broader perspective, for sure. So generally speaking, apart from the spike in the US in inflation, we have seen some rise in the euro area as well. But apart from that, basically what we have seen partly as one of the unintended consequences of loose monetary policy is a lot of asset price inflation. So very low interest rates, the asset purchases that have been boosting asset prices, not so much consumer prices. So these financial stability issues, of course, are very relevant from this larger perspective, surely.